So, hello everyone. Today we are going to be doing another pretty awesome monthly update video. So as you all know, we like doing a lot of very transparent things, giving you all the updates, showing you a lot of information about what we're doing in the MS Text Group, the Alfa Capital Fund, the MSc Academy, and also the Incubate Fund. Because as you know, our company teaches everyone about how to trade, invest, and manage their wealth. But the most important part of this is sharing the information. So today what we're going to be doing is a monthly update video talking to you about how we did in the financial markets in the month of October. Now, once again, this is not any advertising information. This is not to attract new investors or new customers. This is purely just for educational purposes, so you can also see how things are performing with us, but also to do with the growth of the company. For myself, I train students in over 25 countries around the world. And the thing is that we have a big impact in their performance and their education. So for us, it's very important that we can make sure we share as much information as we can with them so that they can learn and grow. And for us as well, that we can keep on growing bigger and growing faster so we can keep ahead of the market and keep on giving the best service we possibly can. So as you all know, in the Alfa Capital Fund, what I do is I trade and invest on the behalf of other clients from around the world. I deal mostly with institutional clients, and we focus mostly on working with people that can actually understand what we do, but also we can understand what they're looking for. That's also very important for us. We don't just try and work with anyone who's just trying to make a bit of money. We work with people who understand our projects, understand where we're going to. And the month of October helped us show that incredibly well. For ourselves, just to start off with, we came up with some very, very specialized projects that we're finishing off in the last few months of 2017. Now, a big part of what the MS Text Group does, MS Text Group is one of my companies. The MS Text Group is a specialized algorithmic research company, and I haven't really told people too much about what this company does. But the MS Text Group specializes in coming up with automated trading systems that can trade for us in the financial markets while we're not there. So more specifically, what we're doing is we're taking very specialized strategies that I've come up with and we're computerizing them. We're making computers do the work for us so we don't have to sit there and do it ourselves. Now, this doesn't work as easily as some people think, and it also is a lot harder than some people think. But what I have done is I've pulled together a team of people that help me build the software inside computer development programs, as well as specialized algorithmic platforms that we've actually had to build ourselves. So it's been a huge amount of heavy lifting, a huge amount of work. But the great news about it is finally coming to an end. It is finally getting to the point where now we can integrate algorithmic trading platforms into the Alfa Capital Fund. Now, what you might think is, why would we want to do this if we trade manually? Now, for ourselves, there's certain opportunities in the market that sometimes we miss and sometimes we can't go for. Being able to use computerized systems allows us to catch those strategies, catch those opportunities, and profit from them. Now, also on top of that, if you look at how an investment vehicle should be run, you should be looking at something that's multi-asset and multi-strategy. Now, for myself, I run a multi-asset, multi-strategy investment approach where I try and invest in multiple different assets, from commodities to currencies to equities, even sometimes moving into derivatives and trading indices as well. But on top of that, I also use a multi-strategy approach. I trade multiple different aspects of my strategy. So I might trade political driven strategies, I might trade short-term or long-term driven strategies. In terms of commodities, I trade very, very strong fundamental strategies, and currencies I like to focus more on trading more technical based approach. But now the algorithmic implementation is going to allow us to create additional strategies and also move into assets that we otherwise wouldn't be able to move money into. This allows us to not put all our eggs in one basket, and it also allows us to diversify the reach of the investment vehicle that I've been able to build. So once again, down to the figures. So the big one is, how did we perform in the month of October? For the month of October, it was a very, very slow month, and I'm going to be uploading another video coming up soon explaining exactly how I was able to produce such good return, trading such a small risk exposure, as well as keeping my maximal drawdown so low. But as you know, we trade two different funds. I trade a aggressive retail fund and I trade a conservative fund. The aggressive retail fund, I try and aim for a return of up to about 40% per year, And for my conservative fund, I'll try and aim for anything between 10 to 15% per year. So for the fund's performance in the month of October, I managed to obtain a 3.87% gain in the aggressive fund and a 0.49% gain in the conservative fund. Now for the aggressive fund, my monthly target is 3.34%. Now if you know, in the month of September, I managed to gain about 3.85%, and this month now 3.87. So for going into the last 2 months of the year, we're already ahead of our targets and we're very happy with that. So what we're going to be making sure to do in November and for December is try and aim for anything between 3.5% to 4.5% in the aggressive fund, close off the fund on a good year in 2017 and re-approach the 2018 year with some more interesting risk-averse strategies that we're going to be talking to you about in the 2018 video. But going on to the conservative fund at 0.49%, I was very happy with this modest return. It wasn't as much as I expected, but I was very happy that I could keep it very risk adverse in the month of October, which I'm going to explain to you now. But for the progress of my conservative fund, doing very well going into the end of the year, probably not as much as I'd like for the 2017 year, but that's perfectly fine. The 2017 year, I feel, was an incredibly volatile year, and it was a very tough year going through between July and going into September, with the big problems to do between the US and North Korea, which unsettled the markets incredibly badly. But now going down to the risk-averse strategy that I've begun to implement in all of my trading strategies. So ask yourself this question: what do you do as a trader? You're trying to make money, but now as an incredibly good trader, what you're trying to do is maximize your profit while decreasing your effort or your risk. And that is what I've been researching a huge amount and I've been focusing on. So for myself, the month of October was a great result to show you exactly how I was able to produce those returns while still staying risk averse. And this is also important because for myself, what I tend to focus on teaching people is to stay risk averse, number one, and number two, then you can focus on making money. So for the month of October, I managed to keep the maximal drawdowns on average between both funds at 0.045%. So the aggressive fund experienced a maximal drawdown of 0.08 and the conservative fund a maximal drawdown of 0.02. Now, as I said to you, the 0.49% return on the conservative fund might have not been a massive amount, but to keep the maximal drawdown to 0.02 was incredibly good for me. And then going into the second part of the risk-averse quantification is the profitability ratio. Now, for some people, they might not lean towards profitability. Other people try and focus on a higher profitability. And that's what I did for the month of October as well. I managed to keep the profitability ratio at an average of 83.33% across both funds, which I was incredibly happy with. Now, if you look at the maximal drawdowns of 0.045, what you can say are the positions that lost on both accounts were incredibly small losses. And that's also important. So I'm not only being able to reduce the amount of losses I'm going through, but I'm also making sure I reduce the size of those losses as well. Now, once again, just to end off on this video, as you can see, what I'm making sure I can do in these videos is, number one, show you exactly what we're doing and how we're growing in the MS Equities group. As you can see, this month, we've now announced a lot of information about our algorithmic research group, and a lot of people are really excited about that, because something I'm going to be doing for the students is giving them some very, very specialized indicators that hopefully my team can get working. Something quite funny, they actually caught me out. They gave me an indicator that wasn't working quite perfectly, and they caught me out on that, but they've fixed it up and it's working really well. So sooner or later, we're going to be giving those out to the students. So that's important for the students to know. Now, for what I'm doing about showing you the returns on what I'm doing on my trading accounts as well, what this allows you to do as well is actually see how you should be structuring your approach every single month. Now, I'm not going to try and give them an opinion-based comment on this, but as I can see in the financial markets, there's a huge amount of people out there that sometimes get slightly lost with saying, well, what sort of returns should I be making? What sort of returns are these people making? The thing for yourself is you have to start off small. You not only should start off small with your size of your account. Don't try and throw all of your money into the financial market. You also need to start off small with your goals and your targets. For as an example, if you want to try and make 10, 20% a month, you're really going to probably burn yourself out and lose money. But for myself, what I'm trying to show you is I've been trading a huge amount. I trade on the behalf of investors. I'm a proprietary trader as well, and I've been doing this for a long time. And these are the kind of returns that I focus on. You know, for myself to be able to run an aggressive fund and a conservative fund, I can run a very diverse strategy in terms of how I want to produce a return every single month. But this is what you also need to focus on as well, is you need to take home from these videos. What should I be doing in the financial markets every single month? What sort of return should I be producing? What sort of risk should I be allocating in terms of different funds? Now, for example, for yourself, maybe managing 2 funds at the same time is going to be a bit difficult for you. 2 different trading accounts. So start off with 1 trading account. Start off with a more conservative approach, going for 12 to 15% a year and trying to keep the maximum drawdowns as low as you possibly can. Now, a lot of people will say, my opinion-based comment that I mentioned right before this is, a lot of people say, oh no, you can make that in a week, you can make that in a month, you can go much higher, much further. But unfortunately, the thing is that when you're starting out, you need to take a more conservative approach. You need to take a more healthy approach. The thing about trading and investing in the financial markets is people think the only thing you're doing is making money. And I completely disagree with that. I feel what you're doing in the financial markets is you're finding opportunities that you can protect yourself from when you make money from it. So as an example, we can't make money without risking money. But I think the most important part about trading and investing in the financial markets is making sure you can stay risk averse. Because I know for myself, when I can take this multi-strategy approach, a more conservative approach to the financial markets, I'll be plugging away for the next 25, 35, 45 years, going at my trading accounts, making compounded returns every single year. You know, for my aggressive fund, if I'm aiming for 40% a year, last year making 35% and the year before 31%, I know my return for 40% a year in my aggressive fund is very achievable. And if I compound those returns over a 25-year period, trading my own money and money for investors, that is a massive, massive return, a huge amount of money. And same with the conservative fund. Even if I'm aiming for between 10 to 15% a year, if I compound those returns over 10, 15, 25 years, I can make a huge amount of money. And that's what I need to say to you, is take a more conservative approach. Don't try and burn yourself out and try and land up losing money and having to refund accounts and go back into the financial markets with a bad taste in your mouth, trying to take a vengeful approach, which some traders do take. What I'm trying to say to you is use these videos, these monthly videos, as a simple guideline of what you should be doing with your trading accounts and with your returns on a monthly basis. For ourselves, we need to focus on 3 different aspects: our monthly returns, our quarterly returns, and our annual returns. And by the end of the year, we need to make sure we can find a way to compound those returns into the next year. And so it goes every month, every quarter, and every year. We try for constant improvement, constant insurance, and risk-averse strategies, and making sure we can improve every single trade we make. Once again, everyone, thank you so much for tuning into this video. I hope you enjoyed it. Please, if you need to contact us, get hold of us about anything, links down below in the description. If you like this video, give it a thumbs up. Make sure to subscribe if you want to carry on watching any of these videos. You find them very helpful. Once again, hope you have a great week and weekend of trading. I'll see you in the next video. Cheers for now.